Okay, so this next video lecture is the continuation of our topic about the substantive procedures to audit payable accounts. So this is the second half of the payable account. So in the first video lecture, we discussed about the substantive procedure to audit the current payable. So this time, this will be the substantive procedures to audit the long-term payable or liability or debt. Okay, so here are the following substantive procedures that are typically performed by the auditor in auditing long-term debt. Okay, first, the auditor can confirm the long-term debt with payees or any appropriate third parties, okay, with regard to the existence of such liability. So in this confirmation, the auditor can also include any applicable sinking fund transactions. Okay, when we say sinking fund, this is the amount of uh, cash that is set aside to settle the long-term liabilities of the entity. So the entity may deposit it in the bank or other financial institution or insurance company to make sure that at the end of the term of their long-term liability, the entity has something to get, okay, for the payment of these liabilities. So the auditor can also inspect, okay, such transactions and any documents related to it in confirming the long-term debt with the other or third parties. So in here, when the liability is owed from the banks, so confirmation is obtained, okay, using the standard bank confirmation. So this is the same with that of the cash account, okay, to confirm the balances. Okay, another, if that trustee is used or there is a third party who manages the entity's long-term liability transactions, so it will be possible to obtain information through the use also of a confirmation whether repayments have been made. Okay, so the communication will be between the auditor and the trustee. Okay, another substantive procedure that the auditor can perform is he can also review the minutes of the board of directors or shareholders meeting where there might be a discussion that was made related to the long-term liability of the entity, any authorization, transaction, and payment, okay, for such. So this procedure is performed in order to verify the transactions are properly authorized. And if necessary, if based on the professional judgment of the auditor, he thinks that an opinion of an attorney has been obtained regarding on the legality of the debt. Because in terms of long-term liability, normally there is a contract between the debtor and the creditor. Okay, so this contract should be notarized, okay, by an attorney, okay, to this is to uh, make sure that the contract is the contract should be followed, okay, enforceable, which means to say that if the entity will not make good of any commitment or promise made, okay, especially for paying the interest and the principal amount, then they can be sued or um, look after, okay, for the repayment of such liability. Okay, so aside from those, the auditor can also do the following substantive audit procedures for auditing the long-term liabilities. First, he can review the disclosures, okay, of course, that is required by the standard. Another is to inquire from the management about any pledging of the entity's asset, okay, as a commitment of their contract related to long-term liabilities. Okay, so this is also a simultaneous conduct of the substantive test, where not only the liability can be audited but as well as the asset accounts, especially if they are subject to pledge, okay, for any related liability. Another is the auditor can also review the arrangements for the liability, which may contain the details on any pledged assets, okay, in case of the default of the payment in the loan. Another is the auditor can also obtain and inspect copies of the arrangement of the liabilities, okay, to verify if provisions have been made or met and if it was properly disclosed. Okay, next, the auditor can also trace receipt of funds. Okay, in this case, when we say tracing, the auditor here will start from the source document. Okay, so he will trace receipt of funds or payment to the bank account and the cash receipts journal. Okay, to verify that funds were properly received in the case of the proceeds of the loan, and for the payment if there has been a proper accounting for any disbursement made by the entity. So here, the auditor will also determine as well some parts of the balances and transactions related to cash. Next, the auditor can also review the cutoff. So this is the same with that of the current liability or payable, to make sure that this account is not understated. And all transactions related to this account are properly recorded in the proper period. Next, the auditor can also perform analytical procedures, okay, that will help him understand and verify the reasonableness of this long-term liability as well as its corresponding interest expense. Another is the auditor can also inquire from the management as to the completeness of the debt or liability. So the auditor can also ask from the management about any contracts or commitment made by the entity, okay, with the other parties considered to be their creditors. Next, the auditor can also review the bank confirmations for any indication of unrecorded liability. Okay, so from the bank confirmation, for example, if the entity made a loan from the bank, so here the auditor can determine if these transactions were recorded in the books. Next, to ensure that there is no clerical error in terms of the amount, okay, for the long-term liability, the auditor can put the summary schedules of the long-term liability, okay, and reconcile this in the general ledger before this were forwarded to the financial statements if it is free from error, okay, in terms of its amount. Next, the auditor can also vouch entries. So again, vouching is the auditor will start from the records of the entity and then going through the documents or source documents to verify the existence, obligations, and accuracy of the long-term liability account. And lastly, the auditor can also recalculate the interest expense or accrued interest payable to determine if they are computed properly and accurately. Okay, so these are the different substantive procedures that the auditor can perform in auditing the long-term liability of the entity.